Competition. We've all competed at some point in our lives. It happens all around us. In nature, it's the competition for resources. In sports, it's the competition to be number one. In the stock markets, it's the competition for capital. Our success in competition depends on numerous factors, which can give a persistent advantage to some competitors. We see winners as having strong relative strength, which means they win more often than they lose. If we were to rank all competitors in each arena against each other, you would notice the winners would consistently rank at the top. So how do you rank competitors against each other to reliably determine who might be the winner? The ATP Rankings in professional tennis provides a good understanding of how a strong ranking process is developed. Throughout the year, thousands of tennis matches are played at tournaments all over the world. The results of these one-on-one matches are recorded and used to calculate the overall standings of every player. Those players who won more head-to-head battles and progressed further in tournament play would earn more points and therefore would rank higher in the standings. The rank of every player on any given day would be a good indication of their relative strength versus their entire peer group at that time. As a result, the expectation of the top-ranked players to continue performing well versus their peer group would be highly favorable. Over time, the movement of the rankings would reflect a change in trend within the player universe. This ranking process can also be viewed in the financial markets as well. At SIA Wealth, we compare the price movement of every investment against its peer group every day to determine its relative strength. Similar to tennis rankings, each investment is then ranked versus its peer group. The power of the relative strength approach is in its ability to use this ranking process at multiple levels in the investment universe. It can be used to rank geographic markets globally, or asset classes, or sectors, or individual investments like stocks, ETFs, and mutual funds. At every level, the investor could determine who is winning more of the head-to-head battles to provide a gauge as to where the strength may continue and when there is a possible change in trend starting to occur. Ultimately, investing deals with probabilities, not certainties. Relative strength investing seeks to identify investments with higher probabilities of continued strength to empower investors to compete in the markets. Compete with relative strength. Partner with SIA Wealth. For more information, visit us at siawealth.com and talk to your investment advisor.